Hey everybody, this is Jim at SP500chart.com. It's about 6:15 p.m. on August 11th, 2013, Sunday early evening, and we're going to take a look at what happened in the S&P last week and also what happened specifically on the 9th. Kind of in an interesting situation where we've broken channels to the downside, but the S&P has not made a significant break downward, nor has it shown that it's particularly willing to make a significant break back upward. We're going sideways. So just trying to get some feel for which way things are going. But before we talk about it, I want to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. So here we go, looking at a 30-minute chart. There have been a number of channels that we've seen break. The first one is almost off this chart here. We probably have to go to a 4-hour chart to get it all in. The first one, of course, was this large channel bounded by this line and this line that lasted from the middle of November, a momentary break in April, but a significant break confirmed by a significant second leg down in middle to late June, broke down in June, and then we've started this trek back up to new highs, new all-time highs that started to break and go sideways. And now the question is this a top or is this a continuation? Let's take a look. Once we came down to those June lows, you can see that we then formed another channel and started to head back up again to new highs. The old highs got taken out by a fairly decent margin, not a huge one, but you know, you look back here to late May, and you can see now we definitely are above that May area. As a matter of fact, if we snap a line on that May high, you can see that we've actually kind of bounced on that a couple times for what that might be worth. Probably not worth that much, to be honest with you. Going back on a 30-minute chart, so we break this second rising channel, the one in teal or turquoise, and then we go sideways, do what looks like something of an inverted head and shoulders shape that doesn't quite pan out. Then we come back down, and I'll be honest with you, we're in between what appear to be two levels of support and resistance, and we spent 3 days over where I think the resistance line is, but just couldn't hold those levels. So we're kind of at a point where there is some degree of volatility, not so much volatility in terms of amplitude of these moves, because really we're seeing days where we're, down 10, 11 points. We're not seeing a great deal of volatility in amplitude, but we're seeing a good bit of volatility as far as direction goes. So, for example, back here in July, coming off the 3rd, we went up for 2 straight weeks. Then we came back a little bit, and then we went up for another week. But now we're down, we're up. We're down, we're down, we're up, we're down, we're up, we're down. So there is no sense of either a clear bullish direction or a clear bearish direction. So my feeling is is that we kind of look at the overall picture of this consolidation range and have the outlook that this move right here, these 3 days we spent over 1700, appear to be something of an outlier. They're still on the chart, so we don't ignore them. But we got over that 1700 resistance, and then we came back down underneath it, and 1, 2, 3 times over the past 4 days could not get back over 1700. So that has now been reestablished, I believe, as resistance. That kind of leads me to think that what we saw in these 3 days right here was something of a premature breakout. And for that reason, we failed to meet what should have been the target from a move over this line. So what we've got right now, essentially, I think, is a support line right here that is currently coming into this week in the low to mid 1680s throughout the week of August 12th. And then we've got resistance back here at the 1700 again. The height of this little consolidation area is approximately, let me measure it again. I'm going to measure it maybe a little bit shy just to be safe. We're talking about something that's about 23 points tall. So at whatever point we might break down from underneath this line, then I would expect at least a 23-point move to the downside. And since we have a gap back here that would provide gap support, I would tend to think that people, if we get down to the 1660, 1659 level, I would tend to think a lot of people would probably expect this gap to provide some support, and they may be patient enough to wait for 1654, 1655 before they think this might be a good opportunity to get back into the market. So I would expect some support here, but only if this line breaks. On the other side of the coin, if this resistance line breaks again, then I would expect that break to be a more legitimate breakout, because we've already seen the head fake, and I think if it does it the second time, that ought to have a little bit more staying power. So let's just see. Right now we're stuck between 1700 and this slightly rising line that is now in the low 1680s, and whichever one of these goes, we're probably going to see a 20, 23, 24 point move to either the upside or the downside. Now, as far as the week went, it was kind of a cruddy week as far as what I thought might be happening, because we came into the week with what appeared to be a breakout over this 1700 line, and we had drawn these trend lines coming into the week, and especially coming into Tuesday the 6th, with the idea that we would probably bounce here and then head up for one of these targets. But instead, the S&P breaks this support. Well, I say support, it's a rising resistance line, so you know it can't provide tremendous support. But I thought it probably would, and it didn't. Instead, we come down immediately to our lower support line, and we bounce around on it for a while, make what appears to be a bear flag. But again, all above support, so the natural inclination is to think we're probably gonna bounce but we got this bear flag. So the bear flag kind of was giving us a little bit of a clue, but it was hard to not think that we would, what am I trying to say? It's a double negative. The rational thing that I came to was we're probably going to bounce here, but we didn't. Instead, on Wednesday, we break through this support line. At this point, I'm thinking we come down to the 1680s, tag this line, and then wouldn't you know it, now we start to mount what appears to be something of a rally, 2 attacks on 1700, but there's something I want to show you. There is a little bit, I would have a little bit of concern that maybe we formed an even larger 2+ day long bear flag, which broke down on Friday, back tested a little bit under lunch. If that is the case, then I would expect more weakness coming into Monday. But because I said it, here we go, let's rally. I'm fully prepared for that. And I'm not making light. I'm not saying that the chart is of no use to us right now. All I'm saying is there's just a lot of getting up 10, down 8, up 8, down 12. We're getting just a lot of moves that seem to be indicative of a loss of direction. Once we either break this line or this line, then I think we should restore either downward direction to the S&P, or if we break 1700 again, upward direction. And hopefully a direction that is in a more, well, what shall I say, that has more direction to it. In other words, instead of us just kind of getting these little whipsaw days from day to day, up, down, up, down, up, down, I'm hoping that we either get a decent down move of 45 points, take it back 35, probably 35, 37 points, or an upwards move of 22, 23 before I would think we would start to encounter some resistance. So I think what I'm trying to say is I think there's a little bit clearer path to the downside. If this breaks, I think we'll get there faster, which is typical of a downward move anyway. So the week was something of a mystery from the get-go. So I don't really think I did that well, and but still, we kept almost all of our trend lines on the chart. It's just that where the S&P moved in relation to those trend lines was a little bit of a surprise to see 2 support lines go on consecutive days. I really wasn't quite expecting that. So coming into this week, we watched 1700 again as resistance. If it gets taken out, then we move up to likely to the 1720s, or we watch this rising support line down here, and if it gets taken out, then I'm thinking more than likely the mid 1650s. So there's your video for the week ending August 9th, 2013. Thanks for watching. Take care.